Let's connect with Jim Rogers, an authority on gold and soft commodities, to get a sense on what is the way forward for commodities, emerging markets, India and China for 2014. Of course, Jim needs no introduction, but just to put on record, he's author of Street Smart, Adventures on Road, and he joins us from Singapore. Jim, good morning and thank you for joining us. Let's start with your favorite topic, which is gold. Now, gold prices have firmed up in 2014, perhaps on index reallocation of physical buying from Asia. Do you think the worst of the price action in gold is behind us?
Well, the huge shorts that have developed in precious metals, as you know, so we're overdue for a rally. We had a big drop in 2013. Everybody got negative. Everybody got short. So we're going to have a rally. I don't think too much of the rally. I would probably sell that rally if I were most investors. I'm not going to do either. I'm not going to buy or sell, but that's my expectation. There'll be a rally. Then later in the year, things will go down again, and hopefully, finally, we'll make a nice bottom, and we can buy gold again.
Jim, so what would you prefer in the precious metal space, gold or silver?
Well, I would prefer silver to gold at the moment. I'm not buying either at the moment, just because silver's down more. Silver's down 60% from its all-time high. Gold is down 30 or 35% from its all-time high. But I'm not buying either at the moment.
So, Jim, according to US percentage of total asset allocation, how much would you recommend one should allocate to gold and silver?
Well, if they don't own any, I would suggest that they start accumulating a fairly nice position, 3 or 4%. If they don't own any, if they have some, I wouldn't do anything at the moment. So I say, I'm not buying or selling.
Jim, the Fed has been tapering, and now that is a reality. As per meeting minutes, the monthly purchases may see further reduction on the back of good economic data as well. Have the markets priced this in, or do you expect turbulence as and when we keep hearing the word tapering?
What will happen is that they will continue to taper. The markets will get worried each time, but eventually there's going to be enough tapering that the markets will get scared. The markets will go down 10%, 20%, I don't know how much. Then the markets will be scared. Then the central banks will get scared, especially in Washington. Remember, these people are just bureaucrats. These are just academics. That's why they work for the government. They don't know what they're doing. Then they'll get scared and they'll start printing money again. The market will sigh a big sigh of relief and the markets will go up again.
So while the US has started tapering, many other countries, Jim, or central banks are still advocating easy money policy.
Oh, it's at least not until the next big collapse. Until we have another serious collapse, and we're going to be overdue by later in 2014, 2015. I don't know when it'll come. I'm bad at market timing. But it's not going to sort out until there's a serious collapse. Eventually, the central banks will not be able to stand in the way of the market. Markets will collapse. Then, hopefully, we can start over from a sound base.
Okay, Jim, so let's shift away from metals and especially precious metals and talk about crude oil. Crude oil prices, which just about managed to close 2013 in a positive territory. How do you see the discovery of shale gas could really influence the script of how crude prices will move in 2014 and beyond?
Well, if I had to buy something in energy, I would buy natural gas, not oil, just because natural gas is down so much. The surprise will be how high the price of energy stays and how high it eventually goes, because we are running out of known reserves of energy, oil and gas all over the world. Yes, we have these pockets that pop up every once in a while, like shale oil at the moment, but known reserves worldwide continue to decline.
So after a 35% gain in natural prices last year, do you see more strength this year as well?
I'd rather be a buyer of natural gas than a seller. Now, it's been very strong here in the last month or so, so be careful. But if it has a good and proper correction, if I had to buy energy, I would buy natural gas, not oil.
What about base metals? Would you be a buyer there? Would you be a seller there? Because what really drives base metal or industrial metal is global economic growth, and global economic growth clearly is coming back.
Well, I bought some base metals index a week or so ago, a few days ago. it seems to me it's time for a rally, if nothing else, because all these major economies do continue to develop. Base metals prices have been bashed very badly. You mentioned several fundamentals. I would be buying. I did buy. I'm not would be. I have bought.
So what's your expectation from the Indian Central Bank policy meeting on Jan 28th and also the FOMC meet on 28th to 29th?
I really don't pay attention. I know you have to because you're TV and people expect you to report something. I don't pay any attention to these guys. The markets have more money than they do. I did say that if they taper for a while, eventually the markets will get worried, but that's because they'll be cutting back on the money. But I don't pay too much attention. Whatever they announce, it's not going to be terribly significant.
Jim, a lot of traders are calling that 2014 will be the year of US dollar, and the underlying thought here is that, look, US economy is making a comeback, and if US economy makes a roaring comeback, then dollar will only strengthen.
Well, I own the U.S. dollar, so I hope they're right. It worries me that you say that that's getting to be a consensus. I like to be on the other side of the consensus. My view is that we're going to have more currency turmoil in the world, more turmoil in many things, and during periods like that, many people flee to the U.S. dollar. They think it's a safe haven. It is not a safe haven, but many people think it is. That's why I own it, because I expect more turmoil. Eventually, whether it's this year or next or whenever, when everybody has flocked to the U.S. dollar, that's the time to sell it and get out. Who knows where I'm going to go then?
Jim, so, while the Indian rupee was very volatile and made record lows in 2013, how would you look or foresee the performance now in 2014?
Well, I'm not optimistic about the rupee. You constantly have huge deficits, trade deficits, government deficits, inflation. I'm just not a fan. If they would open the rupee up, if they would make the rupee convertible, and then we could find a real value, a real free market value of the rupee, I could probably be extremely interested in India and in the rupee. But as long as you've got all these blocked everything, the Indian government and the Indian central bank try to control everything, you can't have a real market. So I'm too optimistic about the rupee. Other Asian currencies, the Chinese renminbi, yes, the Chinese renminbi is probably going to continue to be strong. There will be ups and downs. It's been very strong recently, so it's overdue for a correction. The yen, the Japanese yen, is going to continue to be very weak. Although I bought a few recently because there's so many shorts at the moment, but I'm trying to be a trader. And I repeat, I am a terrible trader, so if I'm trying to go long the yen, it's undoubtedly going to go down. Hong Kong dollar is probably okay to buy. Those are the ones I can think of.
So, Jim, finally leave us with your big idea, your top idea for 2014. For those who want to invest the Jim Rogers way, how should they allocate capital?
I don't have a clue. I'm not any good at that sort of thing. I bought SAS Airline, which is a big disaster. I bought Russia, I told you. I bought the Russian ETF. The Chinese are spending a lot of money on some parts of the economy. I'm looking at places like NTT, a gigantic Japanese blue chip I bought because the Japanese can now have tax-free investment accounts. These are some things I bought, but what's going to be best? I don't know. Whatever I told you would be best would wind up being worst. I wouldn't pay any attention to me answering a question like that.
Okay, Jim, we'll leave it at that. Appreciate you taking the time out and speaking with us today.